Hi and welcome to the channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture towards my aim of financial freedom. They will cover financial products and financial well-being so you, like me, can reach your games, goals and aims sometime in the future. Now let's get into this latest video. Now it's not to boast or brag, say look at me, it's to say if I can do it, you can do it. So this latest video is about my review for my stocks and shares I set during the month of April. Now for those of you new, the plan is annual growth of 10%, dividends during 2023 of £2,400, so let's just say £200 a month, and a year-end value of £94,000. So how was the portfolio done in the month? Well, we started the month £76,404. We finished the month at £78,089, a profit of £1,685, so a good month moving forwards. And a year to date, the portfolio has returned 5.96%. Now we look at the contributions, simple graphic. Contribution during the month was £1,062.73, somewhat sporadic, and the monthly fees from platform provider stayed about the same of £12.28. Now if we look at the following portfolio graphic, just a quick indication of where our holdings are held. It was predominantly UK based, we have been reducing that lately, but at the moment 65.2% is in UK and Europe, 20.79% is in America and USA, and 14.01% is in Asia and emerging markets. So a selection, shall we say, quite diversified. Now let's dive into the portfolio and see what sorts of shares and holdings were held. Now these are my own personal recommendations. Okay, I'm happy to make these shares, they're all long-term shares. It's my own personal opinion. Okay, everybody's different, shall we say, but we own 9 shares, 6 in profit, 3 in loss. Share values collectively is £35,689, of which it makes up 45.7% of our portfolio, of which nearly 39% is in the FTSE 100 and 7% is in the FTSE 250. And we have topped up one of our existing holdings. During the month we made a purchase of Legal & General, £500. Okay, will give a very good dividend in the end of June, but it has got a yield currently around about 7.5%. So it's done to give us a better dividend when the payment is next paid out. And that is currently our largest holding. We own 3,651 shares in Legal & General. £8,500 makes up nearly 11% of our portfolio. Next holding is Lloyds the Banking Group, 16,369 shares, nearly £8,000, 10% of our portfolio, and hopefully during the start of May we'll have very good Q1 trading statements. Our next holding is Aviva, 1,205 shares, £5,100, 6% of our portfolio, and like Legal & General, shall we say safe, secure, steady and boring, but it's given a very nice yield, around about 7%. Our next holding has a very good run lately. It's Card Factory, 3,207 shares, £3,500, 4.5% of our portfolio, and hopefully start of May will give very good results. Now the results were pushed back because of the auditors, but it is somewhat restricted at the moment because of bad debts during the COVID pandemic, but the bad debts have been reduced and it has had very good trading statements issued in the past few weeks. So hopefully results will reflect that, but it's not paying a dividend at the moment. It is restricted. Our next holding has had a good run lately. It's Barclays Bank, 1,588 shares, £2,500, 3% of our portfolio, but it did have very good results in Q1 and the share price has reflected, and are currently trading well below net asset value. Our next holding also had results of NatWest, 902 shares, £2,360, 3% of our portfolio, but it did drop on the day results. Analysts were not impressed, shall we say, with bad positions and the number of withdrawals, but again, still making a profit and well below its net asset value. The next holding is away from the financial services. It's Sainsbury's, the retailer. 844 shares, £2,300, 3% of our portfolio. Has very good results. It's just announced, how we say, profits. Dividend has been kept the same, it's not been increased, but it has been hit, shall we say, with some kind of supermarket price war. It's trying to reduce prices to keep margins, shall we say, or profits, but it has, shall we say, lost some money compared to what expectations were in the quarter, but it's still making a profit. It is still paying a nice dividend. Our next holding is AJ Bell, the platform provider, 629 shares, £2,000, 2.6% of our portfolio, what we've seen as a great or a growth stock. Paying a very small yield, but it is growing. Assets under management improving every trading statement, and the number of investments, number of clients of, shall we say, to the platform has been growing every trading statement. And our final holding is HSBC, 236 shares, on £1,330, makes up 2% of our portfolio, but again, some very good results. It has performed very good during 2023. It will be paying a special dividend, and it has reinstated quarterly dividends. So as low as paid a dividend last week, it will pay another dividend in June. Again, very cash rich and a long-term sentiment away from the UK banking sector. So a lot of portfolio, shall we say, predominantly UK based, predominantly in banks and financial services. A mixed bag of results, shall we say, but hopefully during May, some very good results from certain companies, but all long-term holds. And we see no reason why to sell any of them shares in the foreseeable future. Now let's dive into the funds held within the portfolio. At the moment we own 12 funds, 5 in profit, 7 in loss, makes up 54% of our portfolio, and collective fund value is £42,500. Now we did again top one of our funds up during the month. It was a passive adventures fund, £535. It was done for diversification. A low risk fund we can just switch off, cover all markets, shall we say, and very reduced fees and charges. And on that basis, let's go through some of the holdings. Our passive adventures fund makes up 22% of our portfolio, £17,000. That was done, as we said, for diversification. We can just switch off. It's making a return of about 8-9% a year, and it will pay a very nice dividend soon. But it was done because we were solely, shall we say, UK based when we started the portfolio. Our next holding has recovered during 2023. It's a legal and general technology fund, owns around about 260 funds or holdings, £7,000, nearly 9% of our portfolio. Our next holding is quite selective, barely give it positive change, £3,700, 4.7% of our portfolio, owns around about 35, shall we say, ESG, social governance shares, but a long-term buy hold. Our next holding has struggled lately, shall we say, is a US smaller companies, £2,900, 3.7% of our portfolio, but it was done again for diversification away from the big players in America. One fund that has struggled though is a China fund, £2,831, 3.5% of our portfolio, but hopefully will recover now China's reopened. Growth will, shall we say, continue, but it has had a poor past 12 months. And our next holding of note, shall we say, of size is a mid-cap fund in the 250. £2,000, 2.5% of our portfolio. Now, other holdings we own an AIM fund, a European fund, an emerging market fund. We own a UK equity fund, and our smallest fund is a Russia fund. As we've said in the previous videos, we put £500 in, went up to over £600, nice profit. Ukraine-Russia conflict came and it struggled ever since, but thankfully it makes up 0.3% of our portfolio. So again, 12 funds, a collection, shall we say. It may well be we simplified in the movement in the future when some of them go back into profit. Okay, we're not showing great losses apart from 2 or 3 funds, but it was done for diversification. but we may well simplify them and top up existing holdings. And remember, these are my own personal opinions. Okay, it's not a get-rich-quick scheme. Investments should be seen safe, secure, boring. As we said, we're looking for annual returns of 10%. We're looking for some nice dividend growth, which will be reinvested back in the portfolio. We will have good months, we will have bad months, but it's to prove if I can build a portfolio, you can build a portfolio. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.